Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Charlie Pellet. Doug Krisner has the day off. President Trump has granted Nvidia permission to ship its H200 artificial intelligence chip to China in exchange for a 25% cut of the sales. The decision marks a major lobbying win for Nvidia and could let it regain business lost in the China market. And with more, here's Bloomberg's Annabelle Drewlers.
It's significant for Nvidia itself, and I think, you're pointing to maybe not even the million-dollar question. It's probably the multi-billion-dollar question is what kind of demand are we going to see on that H200 side? We don't know that yet, but what we do know is that the H200 is a much more advanced chip than the H20 that was initially modified for the mainland market. So the H200 is one that has already been sold around the world, but of course we're moving to Blackwell, we're moving to Rubin architecture, so China still will be a couple of iterations behind. But yes, this is a big announcement that's just come through in the last couple of hours, but President Trump giving Nvidia permission to ship these H200 chips to China. It's something we've been discussing for weeks. We saw Jensen Huang just back in Washington even last week continuing his lobbying efforts. So on this front, it certainly is a win for the business. As you said, we've got this True Social post here. You can see President Trump saying that he had warned or informed President Xi of this, Xi responding positively. This is something, of course, a lot of Chinese companies are going to want to see as well. They're still sort of hamstrung by these access to more advanced chips. The question is whether China will allow them to purchase. But at the same time, in terms of the breakdown of the deal, so the Commerce Department says it's still finalizing the details on this sort of accord. But we do know that 25% of each sale is also going to be going toward the US as well. So it's an exchange here for a 25% surcharge. So it's this potential maybe to billions of dollars in the mainland market. But of course, you think about the latest earnings and China was completely written out of the picture as well.
Bloomberg's Annabelle Drewlers. Nvidia shares climbed in after-hours trading after the news broke, and that's where we begin the conversation with Fabien Yip, market analyst at IG, and she spoke to Bloomberg's Avril and Shery on.
Fabien, how does the AI narrative play into the markets in 2026? We do have Nvidia's headline, for example, today about those H200 chip exports to China.
Yeah, that's right. So it's a good news for Nvidia for sure that they got the approval to export these chips. The bigger question is whether China is going to take it, because we did see earlier this year where the Chinese government has been encouraging local tech companies to be adopting their local chips instead of Nvidia's chip. So if this narrative doesn't change, I guess it's quite hard for Nvidia to realize that profit. The good news, though, is in the recent earnings discussions from Nvidia, we did see that Jensen Huang said their projection on revenue growth as well as earnings growth has not been including the growth in China yet. So anything that could be shipped to China is actually an upside for the company.
To what extent are you expecting that to benefit the Asia suppliers?
I think the Asia suppliers will definitely play a very important role in the overall AI chain. Obviously, Japan, Korea, Taiwan have actually been dominating the upper stream of the AI supply chain. So the ongoing improvement in margins as well as the growth in AI demand will continue to drive a pretty prosperous outlook for these companies. The bigger question here perhaps is whether valuations of these respective companies are justified.
When you look at Chinese tech and the idea that maybe they don't need these H200s, given how their domestic options look to be making a lot of progress, how do you position, how do you advocate as an investor when it comes to Chinese tech?
I think the Chinese tech companies are at a slightly different stage, I would be saying. If you look at the AI chatbots that are happening in China, for instance, obviously we know that they're making a lot of progress, but at the same time, the monetization model looks quite different from the US tech companies. I think the Chinese companies are trying to gain market share as they are doing similar moves in other sectors such as food delivery. The margins that are happening in the front end of the expansion cycle looks very different from what we're seeing in the US. But I think it's going to be a leaders take all type of market where we expect to see the leaders in tech continue to grow in their AI capabilities. CapEx spend obviously is another concern that we're watching very closely as margins have already been compressed. If CapEx increases significantly, it could put further pressure on the balance sheet of these Chinese tech companies.
Fabien, what about the Chinese economy itself? I mean, we saw from the Politburo readout that they want to prioritize boosting domestic demand, but Goldman Sachs calling this somewhat disappointing.
I think it's not surprising to see that they have a shift towards domestic demand. If you look at the trade data yesterday, it's actually a bittersweet moment, I would call it, because if you look at the exports, the growth is actually pretty strong. It recovered quite nicely right after the deal with US has been struck. However, import growth rate is still slow, reflecting low domestic demand. The other problem we're having here is it seems like the dependence on export growth is still pretty strong, and domestic demand, which is largely driven by consumer sentiments, and that has been impacted by China's property sector crisis, it's still pretty low. So a shift towards consumer sector, domestic consumer sentiments is a pretty clear direction that the Chinese government is adopting. How well can they execute that, like whether by continuing the consumer stimulus program, by handing out cash where people can replace their old home appliances, etc., can still continue to propel the momentum is a question that we have. I think it needs to be a more structural change in the entire economy, and we need to see an improvement in the property sector for the entire sentiment to improve.
Fabien Yip, market analyst at IG, speaking to Bloomberg's Shery and Avril Hong. Coming up, we go to Australia next, where they are set to ban social media access for children under age 16. We'll hear from Terry Flew, professor of digital communication and culture at the University of Sydney. Welcome back to the Daybreak Asia podcast. I'm Charlie Pellet. Doug Krisner has the day off. We go to Australia, where Prime Minister Anthony Albanese is reminding social media companies that they will be held responsible when a ban on children having accounts takes effect on Wednesday. Under the crackdown, which is the first of its kind among the world's democracies, platforms including TikTok and Instagram will be required by law to block children under age 16 from holding accounts. And that's where we begin our conversation with Terry Flew, professor of digital communication and culture at the University of Sydney. He spoke to Bloomberg's Shery and Avril Hong.
So we are going to unpack, I guess, the for and against arguments for such a social media ban. But talk to us first how we got here after, 3 decades of mostly an unregulated internet.
I think that the pressure for policies along these lines has been building for about a decade. There's a lot of dissatisfaction with industry self-regulation and also a growing sense that a lot of the promises of social media have had significant downsides. So in Australia, the conversation essentially begins about 18 months ago, and there were various proposals around how to address issues around young people and adverse mental health consequences, and a social media ban was agreed upon by government, opposition and the state premiers as the best way in which to proceed along these lines, and legislation was passed 12 months ago. So we've now had quite a long lead time to put in place the implementation of the ban, which will be commencing tomorrow.
What about the potential, initial challenges for social media companies and enforcement? Because that seems to be something like a lingering concern for them.
Most, but not all, social media companies named in the ban have chosen to cooperate, most notably Meta, Snapchat, TikTok, YouTube. Reluctantly, there's an argument there about whether YouTube actually is social media, but they have chosen to comply with the legislation. It's important to note that the legislation gives the Office of the E-Safety Commissioner the capacity to designate platforms as coming under the legislation. It's also important to note that the onus is not on parents to implement this ban, but upon platforms to make the best measures to ensure that those who hold accounts on their platforms are age 16 or older.
Terry, we know that kids, especially teenagers, really get around rules, right? They always find a way. What are the risks that we're pushing under 16 users to potentially more harmful parts in the online space?
That's a possibility, although I would note that the E-Safety Commissioner has the capacity to designate new platforms to come under the legislation. So there's been quite a debate about gaming platforms, for instance, and perhaps a odd arrangement where some platforms are subject to the ban, such as Twitch and Kick, but not Roblox, perhaps because Roblox have themselves implemented an age verification scheme. I think over time, the principal question about whether the legislation works will be seen around the rate of growth in the number of young people using social media platforms. If that begins to decline, and it could, because while there are a lot of online options, network effects mean that people tend to go onto the platforms that they know other people are on. If there's a decline in the number of young people's peers who are on particular platforms, then they may be moving off those platforms as well. And I think that would be taken to be a measure of success for the legislation.
And when it comes to legislation, has the potential positive impact perhaps on marginalized youth and how social media can play into that been taken into account?
There are certainly debates about that, just as there are debates about whether a ban is too blunt an instrument through which to address some of these issues. I think there is a strong case for saying that if there's reduction in online social resources, then there should be a commitment to other resources for young people. I should say it's not actually a ban on using the internet. That would be ridiculous. But it is a ban on accounts on particular platforms, because the view has been taken that holders of accounts can be subject to algorithmic manipulation.
And also, what made 16 the right age for these restrictions?
Well, I think that's a debate. I mean, one challenge is that, of course, in the US, the threshold age tends to be 13. And I would say that given that many of these platforms have had a rule for a long time that only those aged 13 or older can hold accounts on them, had those laws actually been implemented at the time they were created, or had those rules been implemented by the platforms, we may not be having this conversation. But the fact is, for 20 years or more, they for the most part haven't. So we do find ourselves with an arrangement around under 16. But there is certainly a debate around developmental stages of childhood in that regard, about whether those aged 14, 15 have a greater degree of maturity than those aged 12 or 13. But I would say, at least in Australia, there's been less conversation about the age at which it's been set, but around the principle itself.
As you alluded to earlier, there's a debate still about the extent in which this maybe constitutes a bit of overreach on the part of authorities. And there are other countries, developed economies included, that are looking at Australia as a sort of example of what they can bring on to their regulatory environment. How do you think they will be watching all this as it unfolds?
Well, I think that the principal question will be, in the first instance, will we see mass civil disobedience against the legislation? I don't think that will happen, but there's certainly a lot of talk around young people using various measures to circumvent the rules, such as VPNs, such as fake IDs, and so on. Actually, the laws themselves are very difficult to implement without some level of parental support. So I think the measures are in part about empowering parents who've felt very disempowered in their dealings with young people's use of social media, and I think that has attracted attention internationally. Whether the age is going to be the age at which other countries land on will remain to be seen. In some countries, such as Malaysia and New Zealand, that is the talk. In others, such as Denmark and France, they're perhaps looking at a lower age, such as 14. But the general principle that a largely unregulated internet where children basically have access to the same content as adults, a sort of 30-year experiment that we've had in this, has been deemed to have a significant number of downsides, and the number of people making the case that nothing should be done in this area, I think, has been diminishing over time.
Terry Flew, Professor of Digital Communication and Culture at the University of Sydney, speaking to Bloomberg's Shery and Avril Hong.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.